Hey everyone, hope they're having a good day. My name's Andy. My channel's Finding Value. Today we're gonna roll through Twitter, see what people are sharing on social media. I interject my financial opinions as we go, generally related to three different topics: wealth building, commodities, and/or financial topics. So let's dive in. Let's see what's going on, and I'll share my opinions. If you want to follow me at Finance, and if you want to join our community, finding-value.com, where we dive deeper into sectors, deeper into companies, and I share exactly what I'm doing in the portfolio real time. You can see exactly what I'm buying, when I'm buying it, and what I usually explain why I'm buying stuff too. We still have LEAP, the coupon code, if you're interested, LEAP. And starting with Calvin here, he says, well, Jack says, big news for metals. U.S. imposes sanctions on use of Russian metals on exchanges. And of course, Calvin says platinum and palladium limit up. I don't know how true this is. I don't know what the necessary effects will be. But if that is true, Russia has about 30% ish on the platinum group metals for the percent that they have in the market. The other majority percentage in the market comes from South Africa. South Africa is somewhere between 60 and 70%, and Russia is somewhere between 25 and 30%, depending on what you look at and what metal group you're looking at. So I've always thought this was in the back of my mind, where I'm looking at this and it's like we've got platinum at a ratio low against other metals, just incredible value in platinum. And I just kept thinking in the back of my mind, what happens if something occurs in Russia with this war and the platinum group metals? This could be a big upside move if something were to occur there. Now, I don't know what exactly is going on. It doesn't really matter because I'm already in it and I'm already set up for this type of move. But if this does occur, we could see we could see some fireworks, guys, in the platinum group metal area, and that's where it's probably the least diverse group of metals or commodities even in the entire world. Uh, Basically, from what I understand, is um, stuff from outer space. I believe it's on asteroids. Comes, it hits the Earth, it cycles in the Earth's crust, and platinum group metals have really are concentrated in only a few areas in the world. So that's what we've got there, and we'll see what occurs next week for platinum and palladium. I will say that both of those charts look very good for upside potential. Platinum has been basing out for a while. We've got the three hump consolidation. We broke out and we've been basing, like basically building up energy. And that energy is about to break the downtrend line. We're basically breaking the downtrend line right now as I basically speak Friday, and we're about to really take off. So if this is the case, this could be the we'll call it the catalyst to get everything moving. And palladium could definitely come along for the ride. Commodities to equity ratio. I talked about this with some people outside of the Twitter world and stuff like that. So you've got undervalued commodities at the bottom, overvalued, we'll call it overvaluation of commodities at the top. This is where you'd want to buy your stocks in mid 70s, early 80. Right here, early 90s would be a good spot. And then also 2009, 10. And we're just coming up barely in commodities. And some of our commodity stocks are up hundreds, maybe even thousands of percents in this little move. In this little move. We have a gigantic runway ahead of us in terms of valuation runway, still in the commodity to equity ratio. Now, a big chunk of that, I think, will come from equities falling, and commodities, I think, will still go up. But I do think a big chunk is going to come from equities falling out in the future. So it's a combination of equities falling and commodities going up. Here's cocoa futures. Look at this chart. Did this break out? I'm just joking, obviously. Look at this, guys. Let me zoom this back in real quick. Look, look at that move, guys. Huge move of just vertical movement in cocoa. And some people were like, well, maybe we should have went into cocoa miners. And I don't think they mine cocoa, but they definitely grow it and harvest it. Coming on down. Platinum wants to pop here. What do you think? And this is what I was talking about platinum. Ratio-wise, it is cheap against the other metals. So platinum is building energy here. So generally what you do is you break out. Your breakout is right here in 2021. Breakout, and then we're building energy all through here. We're right there ready to break out of this downtrend. And we do have some resistance here at about 1050 going across to the left. So we're right at like a really opportune time to potentially break out of everything and get a big run out of platinum. Now, if we have some sort of problem with Russia, I I, I would suspect that that could go up a lot. I know people have talked about platinum group metals being sold off a lot because of the war, and perhaps maybe that's why they're trying to sanction it to basically choke them selling some of their metals. But we'll see. I'll just say we'll see. I don't want to try to predict anything. This is platinum versus gold on a ratio chart. We're at zero point 0.4, guys. 0.4. It's never been this cheap in the history of this ratio. We're off the page cheap. Outside of maybe 2020, it was the same as 2020. We've got platinum to palladium, and platinum's been outperforming palladium. It's working its way on up. There's been a lot of substitution occurring where platinum is substituting palladium. And when you look at the deficits out in the future, it's very favorable for platinum. There are deficits in platinum, and then they are projecting some surpluses for palladium because of the substitution. And then we've got platinum versus silver, and I know everybody thinks silver is the most undervalued commodity in the world. It's actually natural gas. Okay, I was going to say platinum, but it's actually natural gas. Platinum is also up there in terms of how undervalued it is. It's a top 1, 2, 3, somewhere in that range. But we could see this be a double bottom here, where you kind of bottom, hit it again, and then we rip. So platinum could be the best metal to invest in. I think silver is really good too, though. I like platinum and silver right now. Coal is looking to pop. We're talking about Newcastle coal futures. So big picture view, basing, breakout, and then the retest. But if you look in and on that right-hand side, we've got a downtrend line that we're about to break here. Another really good opportunity for investment is coal. And yes, I do have a bunch of ideas on how to invest around coal. It's not an unlimited amount. There's maybe a handful of companies that I really like. They pay big dividend yields, which is good. We can get them at a really opportune time. And if you look at their charts, they also are breaking out of bases like this. And basically, they've got the double bottom. They broke out, and they're doing this retest, just like coal is. So they're very they track and they move very well with these coal futures, which is something I look for. I want to see a dependable, reliable, leveraged play to the underlying commodity. Adam Rossi says, today you can buy an ounce of gold for $2,400 and 1 ounce of platinum for $1,000. As the gold to platinum ratio chart shows, since 1974, platinum has never been this cheap relative to gold. So either platinum is too cheap or gold is too expensive. I'm in the earlier camp where platinum's too cheap. Now here's platinum. This is how much platinum has been mined. Gold is below it, and then silver is on the right-hand side. So obviously we've mined a lot more silver. There's a lot fewer gold, but there's also way less platinum than even gold. I believe platinum is something on the lines of 30 times more rare is the number that I have heard. So if we look at the ratio here, it says, what is the current gold to platinum ratio? You can see if you were to do this, you say switch to platinum above this ratio. But look where we're at today. This is in no man's land up here. This is what I consider to be probably one of the biggest opportunities of any precious metal almost in history. The other opportunities I saw was 2016 rhodium. In 2009, palladium was an opportunity. Obviously, we've had some opportunities in silver. In 2020, the silver to gold ratio went to 120. The actual physical metal never got there, but the futures pricing did. Platinum was also at a very good low in 2020 for purchasing. But here we are, and we're back again at that purchasing. Here's 2020. You can see where we are, and we're right back at that level. So huge opportunity in platinum. And yeah, I can talk about buying physical and stuff like that. Christine says, frac spreads -5. This oil price rally is different. There is an inverse correlation in U.S. activity, the new wells, due to bottlenecks I discussed in Wall Street for Main Street. There will be no increased supply from U.S. producers to bail out consumers as summer hits. So I think a lot of people are expecting some big numbers for oil to move on up during the summer, and no supply response from the U.S. shale area because of full pipelines and natural gas. Lance Lambert says U.S. home prices as measured by the Zillow Home Value Index, they rose 1.1% between February and March of this year without seasonal adjustment. That's just a tad warmer than a normal year. So we're going up even with this ridiculous mortgage rates. We're a tad warmer than a normal year. Surprising, I get it. Peter Schiff says, while gold couldn't hold today's rally to a new record high of 24.30, it still finished the week with solid gains and held yesterday's low. All today's $90 sell-off was get next week's correction out of the way earlier, setting the stage for a sharp rally to new highs. Well, that's what Peter thinks. Now, I'm not as bullish yet. We saw that a big bearish engulfing candlestick. Now, I'm not getting bearish on the metals by any means, guys, but we did throw in a reversal candlestick, and I want to see what the follow through is next week on that bearish reversal candlestick. Aaron says, remember, triple tops are not a thing. This happened to gold before it busted through. Silver will do the same. And that's what I mean by the reversal candlestick. And I'll show you that on this one here. These are reversal candlesticks. You get these big wicks at the top on a weekly candlestick, and we did have a big wick at the top. What that means is there's resistance up there. We're hitting resistance. There's some selling pressure that we're hitting, and it came back from those levels of price. So it came on back down. We could swing back around and loop back around to move on higher. Sometimes it kind of avoids it and it just rips. I don't know what it's going to do. I don't want to try to predict the future here. But we did hit some resistance, and I want to see the follow through next week to see what occurs. If we get some selling pressure, it'll probably be a loop. If, like Peter maybe thinks could happen, maybe we just rip higher, and that could be a possibility. I think we're going to loop. That's my guess. Or kind of sit here and base out a little bit, just underneath about $30 an ounce, $29 an ounce, and gather our momentum again and then rip it. But it might not take that long. We might have just a little loop or a couple of days where it goes sideways for a little while. Gold Venture says concentration of paper contracts, silver is 3 times cocoa. So cocoa's here. You can see it here. And look at the two on the right here, silver and platinum. Then we've got gold underneath it. So silver and platinum are probably the ones that are going to be busting a move, hopefully. I'm going to read this here. It says 35 super uncomfortable facts about life that'll make you indestructible. So let's go through them. So I'm just going to read them. I'm not going to read the number. The vast majority of millionaires are self-made. Money is attracted to people who work. Marrying the right person is the greatest life hack. If you're easily offended, you have too much free time. Boasting about working 12-hour days isn't a mark of productivity. It's a sign of poor boundaries. You have more opportunities today than anyone in history. Marrying late is better than marrying someone who is wrong. Work ethic will outperform natural ability throughout a career. Most people are too self absorbed to understand what they want. Happiness is a choice. CEOs do more for this country than politicians. It's not even close. Don't keep up with the Joneses. They're broke. One of the best ways to remain poor is to hate those who are rich and successful. The woke are usually broke. It is your responsibility to be fit, healthy, and financially secure as possible for your family. Those who complain the most accomplish the least. Your addiction to politics is dragging you down and making you an insufferable person to be around, whether you realize it or not. About 90% of Money Twitter's advice will leave you poor and burned out. Arguing online is a sign of weakness. If you can sit for 60 minutes in total silence with no phone, no computer, and no distractions, and be happy, then you're destined for greatness. The secret to success is doing what others are unwilling and unable to do. Staying up super late on the weekends will kill your Monday productivity. Those who think they need 10 million to be happy will never be happy ever. 99% of people should be 100% index fund investors. Showing up is half the battle. The 40-hour work week could easily be replaced with 10 to 20 hours of focused work. Hey, I agree with that one for sure. Getting rich is a habit. It's like saving money every paycheck. Making money while you sleep is literally how rich people get rich. Moving out of your big city and into the country could solve most of your problems. You're probably just one long walk away from your next big idea. The ability to communicate effectively in front of large groups of people will make you far more successful than getting straight A's in school. That's actually, guys, this is a huge one right there. Being able to communicate in front of large groups of people will make you far more successful than getting straight A's in school. Totally agree with that. Totally. That's a huge skill to have. Hard work creates good luck. The government doesn't control the age of your retirement. You do. As an adult, it is your responsibility to unlearn the things taught to you by a society that doesn't have your best interests at heart. And the last one, you become 100 times more successful when you find a group of friends who talk about investing, fitness, and business. So there's this top 35, guys, if you want to know. Tim Hack, it says, what if silver is the beginning of cocoa-like melt-up? And we looked at the cocoa move earlier. That very well could be the case for silver. We had that big move breakout here at that $26 level, 25, 26, 27. Could we get a gigantic move in silver like cocoa? Yes. Yes, we can. It doesn't mean it will, but we could. We can get it. It's possible. And possibility is not probability. I'm just saying it's possible. GDX miners heading up into the upper band. So we've got this pattern here. We're coming up into some resistance. We're heading up into that upper band of resistance. If we can break that resistance, the potential targets ahead is 48, 68, 105, 154, and 250. Yeah, I said that, 250, if it were to get all the way up there. And those are the fractal movements. Cross-border capital, continuing the story, we've got increased shipping activity, which correlates with CRB commodity prices. They are moving on up, and it looks good for both. Decade Investor, what are your thoughts on a 0% APR for 12-month credit card? I think that it's garbage because I can get 0% APR for an 18-month or a 21-month credit card. It depends on what you want. The 18-month, there's a Wells Fargo one out right now that offers a whole bunch of rewards, and it gets you a 0% APR for 18 months. There's also cards out there that are 0% for 21 months, but they don't give you any of those cashback perks. I would rather take the 18-month with all the cashback perks. I also think that they give you cash, like a bigger cashback for the first amount of some amount purchased, like $200 or $300 back or something like that. Then you get a 1.5% unlimited amount or 2% unlimited amount or something like that. I use these credit cards for big purchases that I need, and I don't want to loan money for it. So I'll open up a credit card if I want to change. Let's say I needed new windows on the house, and it's like $20,000 for windows or 20 something thousand bucks. I put that on the credit card, or I don't know what the limit on the credit card would be, but let's say it's a $15,000 limit. I would pay 5,000, 6,000, 7,000 up front. Put the 20,000 or whatever the limit is, 15,000 on the card, and then pay that off slowly over the next 18 months. That's what I use it for. It's basically a way to loan money or credit at 0% annual rate. That's what I would use it for. Or if you're going to purchase a car or something like that, you could do that with a car even. And it's way better deal if you've got the money to pay it back. Marion Kachusa says, "Wow, Costco is expected to sell $2 billion in gold bullion in 2024. The U.S. Mint sold $2.7 billion in gold bullion in 2023. So Costco is they're killing it. They are killing it in their gold bullion sales. So the average debt by age in U.S. Gen Z is about 30 grand. Millennials are 125,000. Gen X is 157, and the baby boomer is 95,000. What do these numbers tell you? It just tells you that these people might be spending more because they probably bought a house. That's what I think it's telling us. It doesn't mean that they need to necessarily take on more debt, but also where you're at in your stage of life. I would expect Gen X and millennials to have more debt than the baby boomers who are closer to retirement. Dow Gold equals, so this 125-year silver channel is completely valid. And with such a large move within historical precedent, we can say with a straight face that price could indeed approach $1,000 this decade. What do you guys think? $1,000? That's way up there in this channel if you were to hit this upper channel. I think it's possible. I don't know what the probability is. I think it's definitely possible. I just don't know the probability. Rowan says 30-year mortgage rates are at 7.37% today. Don't know how you folks keep buying houses. Well, I mean, that is a lot. That is pretty up there. Eric Nuttall says, what oil sanctions? So Iranian oil exports continue to increase over time. What sanctions exactly? But that also means that the oil markets are tighter than what most people think because Iran has been pumping it. It's been pumping it up, baby. House price. So these are housing prices since 1942. This time is different. Look at these house prices. Up, 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 up. The only times we saw a negative home price was in 1990. That's where we had a big hyper supply phase. We built too many homes. We also had a recession from the housing market in 1990. That also occurred in 2007 and 8. So these were house prices, and this is how often they went down since 1942. Out of all the years, we've had 1, 2, 3, 4, 5, 6, 7. We've had 6 down years. 0 and 0 is flat, so that's not a down year. So we had 6 down years. 5 of those were related to the Great Financial Crisis, and only one of them was 1990, where home prices fell 1%. 1%. So all these people calling for this big crash, I'm just going to say good luck. Good luck. This is the data. House prices don't crash very often. You're basically calling for an anomaly. Good luck with that. Invested wisdom. Unless you buy a stock at the exact bottom, which is next to impossible, you will be down at some point after you make every single investment. Your success entirely depends on how dispassionate you are towards short-term stock price fluctuations. Behavior matters, says Joel Greenblatt. Another one by Howard Marks. Large amounts of money aren't made by buying what everybody likes. They're made by buying what everybody underestimates. Got to change that market psychology, guys. So here's Grady. He's talking about oil and gas companies versus the U.S. stock market. It says that's a picture-perfect breakout and backtest for this ratio, showing that oil and gas companies should again start to outperform general equities. Your breakout, your backtest on top of it, and we're ready to rip at some point here. The patient are the ones who are going to make all the money here. I bought in 2020 in this bottom over here, and I've been riding it the entire time, and I'm just holding on because the valuation runway is still big for energy companies. And that's what I'm using to guide my buying and selling movements. So here's LaShrub. I like this, guys. I like it because he's right. He or she is right. Says, here's my take on the current situation. Bonds are trading like Yellen is on the loose, printing $5.5 billion a day. Gold is trading like Yellen is on the loose, printing $5.5 billion a day. Stocks are trading like Yellen is on the loose, printing $5.5 billion a day. Oil prices are trading like Yellen is on the loose, printing $5.5 billion. And housing prices are rising like Yellen is on the loose, printing $5.5 billion every day. Everything adds up here. Yellen is printing a bunch of money. that's really what it is. And I agree. Charlie Bellello, he says monthly mortgage payments needed to buy the median priced home for sale in the U.S. is at $2,750 in April of 2024. That's an 86% increase over the last 4 years. That just indicates that we've got a major shortage of homes. That's what that is indicating. Gold is just starting to go parabolic in the Japanese yen. No big deal. Look at that go, guys. Oh my goodness, Japanese yen. Investment wisdom. In the real world, you uncover an opportunity, and then you compare other opportunities with that. And you only invest in the most attractive opportunities. That's your opportunity cost. That makes sense. Tavi says this is what happens when central bankers turn dovish in the midst of what is clearly an accelerating inflationary environment. None of us own enough hard assets. And there's the breakout for gold junior minor companies. We've got a little bit of a turtle head breakout is what I like to call that. It's just peeking out. Looking good. And that's all I've got, guys. So that's what I've got for today. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. We're doing our question and answer session right now. If you want to be a part of it, go over to the website, click on the Zoom link, join in to the Zoom meeting. If you're a member and you want to join the question and answer, that's just a reminder. It's going on right now. All right, guys. That's all I've got for today. We'll catch you later. This is Finding Value.